Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the cannabis sector. Okay, let's take a look here at ticker symbol MJ. This is the Alternative Harvest ETF, and the first thing to take a look at here is RSI. You can see here it's bouncing off of the 30 oversold line. Below 30 is oversold. If you look here in the past, it does not like to stay below 30 for very long. Look at the last drop below 30, that signaled the bottom, and then it had a very nice run. You can see other bounces were off of 30, and so at least it went sideways the last time it hit 30 there. So you're getting close to a bottom here. All right, for a technical bounce, it could bounce off of 30 for a couple weeks like it did back here in July, but we're going to see here if it can find support. Right now, Fasto is at 9.5, so it is below that 20 oversold line. So you do have a very oversold condition right now. Down here on minus DI, you can see here it has dropped to lower levels in the past, down below 15, and so that could push a little bit lower. You just have minus DI here at 34.46 right now, and so basically during this big pullback, the technical development that happened yesterday was the two gaps that were filled. Okay, so this chart, these annotations were made during the trading day yesterday when this first gap here, gap number one, I was calling it, this gap between these two, low of day on this candle and high of day on this candle, that filled with this red candle during the trading day on the 29th on Monday, and then actually it ended up pushing all the way down and filling gap number two. Okay, and so that lower wick filled gap number two, and it bounced off of that level. Well, today it's bouncing off of that, it bounced off of that support zone, and the candles worked back into the Bollinger Bands. The key now is to stay above the top of the second gap. That's basically right there around 29, it looks like. And so if it can stay above 29, the key level to break is going to be up here at the next gap level in EMA 4. It's going to be getting back above this 3068 level and back above the top of the first gap. Now, if it were to drop back below this 29 level and get back below the bottom of the second gap, the downside risk is it comes down here and fills gap number 3. There's an unfilled gap down here in August, and so a drop down here to right around 27, 25 or so, that would fill that gap. Now does the Alternative Harvest ETF, does it need to fill all 3 gaps before bouncing? That would technically be a better setup. If it bounces now and fails to fill that gap, they will bring it down more than likely at some point to fill it later. So while you're down here, might as well fill the gap. The chart would be technically stronger, and then come back and break through resistance. That would be better. The one thing is that this did have the big retrace, all the way back, giving back most of the gains. And so yeah, this is a hefty retrace from the lows here. And yeah, we will talk about that in this next chart here. I want to show you another MJ daily chart, and you can see the Fibonacci retrace. If you go from the from the very bottom, the low on the 14th of August, to the high over here on the 18th of September, right now you're looking at, it dropped below that 61.8% level. That was at 32.83, and now you're heading down towards this full, close to 100% retrace. If it came down to back down to 25, that would be a full retracement from the August rally. Right now, hitting 28, that's a really hefty pullback, and so that is a red flag. Is it going to come all the way down to 27? Is that what needs to happen to fill that last gap? That remains to be seen. We will see. It's going to be all about breaking EMA 4. If you see EMA 4 turn into support, and then it has, the difficult thing here is that you have all these moving averages. Look at each one of these lines as a resistance level, and so you have multiple resistance levels just stacked up right here, and so it's going to take a lot of work to get through. Basically, you're going to have to get up here to this 32.41 up here at EMA 8, which is lined up with the 100-day simple moving average at 32.36. It's going to have to get above those top moving averages that are clustered together here to really start breathing and being able to move higher. You know, hitting so much overhead resistance now makes it difficult. It's going to have to bust through and turn those levels into support to get a new uptrend going. If they remain resistance, it signals downside risk, and it could come down and fill that gap down at 27.25. Okay, let's look at CGC here. This is Canopy Growth. So notice RSI here is bouncing off of this 30 support zone, right off the level that it bounced off of last time. And so you want to see it stay above 30. That would be good for the bulls. It was a nice recovery here with up 2.72%. So we'll see if this can get a sustained bounce going. Right now, you know, you had the white candle form, but not a bullish reversal pattern. You know, it's trying to get a crossover here on Fasto at 7.84. It's still oversold. You had a bounce today after filling the gap yesterday between these two candles. And so right now it's trying to bust through the top of the gap level. That's the second red line right here. And so it's going to need to break through that level and turn it into support to head higher. The big level to break right now is EMA 4 at 35.89. As long as that level's resistance, it signals the bears are still in control. Any kind of bounce is just a short cover rally back to that level. See how they keep selling right there? And so it remains the sell zone until you can get a close above. Once there's a close above EMA 4, that's going to be the signal, okay, they're ready to take it higher. Now, it failed to get through this gap zone here. It would put this 200-day simple moving average on deck at 31.35. That level needs to hold. If that were to break, you could see a drop down here to 29, down to the top of this gap. There is a big unfilled gap down here. A drop to around 26.50 would fill that gap. If you look here at the Fibonacci retrace, if you go from this August 14th low up to the high up here on the 16th of October, that would represent this big push here. You know, right now you're looking at 37.75 was that 61.8% retrace, and it busted through that whole level yesterday. Notice how that it was holding that support zone from the Fibonacci retrace like a champ, and then now it's busted through that, and you're going for you're looking at 80. You know, it's getting up there in the retrace, and so once you start breaking below that 61.8 level, you know, sometimes it signals that it's going to be hard for the stock to snap back and get back to those previous levels anytime soon. We'll just have to see. It can easily do that if the buyers step up, but right now the bears are in control, and so it's going to be all about holding this 31, the 200-day simple moving average, and then first of all getting through this 34 resistance zone, 34.25 through this gap, and then back above EMA 4 at 35.89. Now if we look here at the weekly chart, you can see here how it's been uptrending. Notice how it's trying to hold the ascending support line, and so this is going to be the big level to hold. It's working on it. This week's candle will not set until the closing bell on Friday, and so it could easily close above that green line and hold support like it has done for multiple months for the last couple of years. And so you know, this would be, if it does hold, this is the reload zone, and the uptrend is still intact. You know, the downside risk, if it breaks, it could come down to the 50-week moving average at 29. There should be buyers stepping up to that zone, you would think, unless the chart's really going to break down. That would be a nice load zone. If it gets back above that middle Bollinger Band at 38.18, that's the dotted purple line here, that would be a clear signal the uptrend's intact, and then we'll be looking for a push back up into those 50s. Okay, so yeah, this is a big pullback, but as you can see here on the 15-minute chart, it's heating up. Notice the symmetrical triangle here. So the symmetrical triangle was broken to the upside there at 245 today. And the close above this red descending resistance line on this candle right here is signaling more upside potential. Notice how that was the big resistance level. And so it broke above. It needs to stay above this green line and then push through this key resistance zone. It's the high close here from 10.15 and above the 50 simple moving average at 34.22. If you see candles forming above those levels, you know, basically around 34.25, that's going to be your clear signal that it's ready to head higher. That should be the signal. And then it just has to stay back above these levels. Right now, that middle Bollinger Band is your stop loss level. It needs to stay above that 33.76 level to try to remain in play here for a technical bounce. But really, it's got to turn that 34 level into support. If it does, it could possibly run back up to that 200 simple moving average at 36.85. Keep in mind, if that middle Bollinger Band turns back into resistance and it starts heading lower below EMA4, similar to this pattern here, it's going to signal downside risk. It'll signal it's just not ready to go. But keep an eye on it. It's setting up. Okay, let's look at Aurora Cannabis here. Aurora Cannabis is bouncing off of the 30 level on RSI. Okay, they just uplisted to the New York Stock Exchange, and so yeah, this is it just didn't work out well with the timing, but they're a very major player in the cannabis sector, and they should find support down here. There is an unfilled gap from down here in August between these two candles, and so a drop down there to $5 would fill this gap. In my opinion, it would be better to just fill the gap while we're down here. I know it sucks if you're in and you're at much higher levels to have it drop even further, but the chart would be technically better. For penny stocks, and this is still a penny stock, especially marijuana stocks, they have always filled gaps. I've never seen a marijuana stock, or I should say cannabis sector now. I want to be, give it more respect. It's a the cannabis stocks have always filled gaps. And so if they run this without filling the gap, it'll just make it a target for the future. So you might as well get it out of the way. The chart will be stronger, and then you can get a technical bounce off of that zone in order to try to push the resistance. Now, many times the market makers will bring it back down to the gap level, and they'll see everybody's got their orders in at 5, and so they won't fill it. They'll run it beforehand, and they'll get everybody chasing, and that could happen here. And so how will we know if that's happening? Well, we'll know if these two levels, the blue line and the pink line, break on the daily chart. If it gets above that 300-day simple moving average at 633, that's going to be your clue it's heating up. And then if it closes above EMA4 at 658, that's going to be your clue they changed the computer trading programs. The algorithm has been changed. The algorithm right now has been to sell at the pink line, and so every time it hits that pink line, EMA4, it's the sell zone. Once they allow it to close above, then that's the signal, okay, they're ready to take it higher. It has the moving averages stacked up here. It's going to have to get above EMA8 at 739, but first things first, let's see if it can get above this 300 and EMA4 moving averages to head higher. It would be great to see it run. I would just, it would just be better to fill that gap while you're down here. Let's look at ACB here on the monthly chart in this video. I showed you the weekly chart last night, and so yeah, just take a look and see how it's faring on the monthly chart. This is a longer time frame, so it takes longer for these candles to set. It needs to stay above 50. If it dropped below 50, that would be a very bearish signal. Fasto is already below 50, and it's hitting some low levels here. It's going to need to get, stay above. You don't want to see it drop above the levels of support that it's bounced off of before. That would signal the chart is really cooling down. You can see there's a big red candle this month that's forming on a giant volume spike. That is not what you want to see. You don't want to see, that type of, you don't want to see the big volume spike to be on a down month, whatever time frame that you're looking at. That's just a red flag at the top of a run. You have building volume, and then you have the climax spike with the big volume bar. But people could be they could be loading on this pullback. We'll see what happens. It's going to all come down, in my opinion, to this middle Bollinger Band currently at 510. It needs to hold that level. If it were to close below 510 for the month, that's going to signal downside risk. We have one more trading day in the month, so this is getting ready to set, and then a new candle will form. This candle sets at the last trading day of the month at the closing bell, and so it's going to be really important that it closes above 510. You don't want to see it turn the middle Bollinger Band into support, because that would signal the possible start of a downtrend. Now this is getting it. If the middle Bollinger Band holds, it should be the good reload area. Look how this was the good reload zone when it came down to the middle Bollinger Band before. This has not been tested very much. This is a big pullback for the stock. Once it bounces here, what you're looking for is a break above high close horizontal resistance, and that's the closing price here at right about 950 on September, the high close. Notice how in September, it closed just above the closing price in January. That's signaling that possibly it wants to head higher, but it did also, it has that double top look at that level as well. Okay, let's look at ACB on the 15-minute chart. As you can see, it has a very similar pattern to Canopy Growth. It's setting up here. Notice the ascending support. You've got like this, ascending triangle type of pattern, and so it's going to all come down to the green line once again. That 50 simple moving average at 608. It closed at 609, just above, and it had closed above that level at 245 today. And so it's going to be about staying above the 50 simple moving average and then getting above that closing price at 245. Basically, you see it trading at 620 and above, and that should be the signal. Okay, they're bouncing it, and it could possibly run back up to that 100 simple moving average at 667. That would be the next big target. It's going to need to get through this resistance zone right here and break through this 635 level as well. So yeah, keep it. The chart's wound tight here, but it has to bust through resistance. Notice how it keeps going to the 50 simple moving average and it fails to break, and that signals the top. That's what it did again here. Is it going to repeat this process, or is it finally going to turn it into support and push higher? We'll just have to follow the charts. Okay, let's look at Aurora here. Aurora is getting ready to uplist to the New York Stock Exchange, and so yeah, they'll be trading under I believe the ticker symbol was APHA, and so yeah, this will be the next one in line after Aurora Cannabis just uplisted just recently, and so and same thing with Canopy Growth, and then we had Tilray and Cronus Group. They're just going down the line with the big players. Aurora pulled back as well, and you can see here it's hitting the 300-day simple moving average here at 988. That's the big level to hold. Okay, it's holding it right now. If it can bounce off that level, that would be bullish. And then what you want to see is a break back above this 200 and 100-day simple moving averages in EMA4. They're all lined up here between $10.75 and $11. Trading above $11 for Aurora would be a good signal that it's trying to bounce. It's ready to get a sustained bounce going. If it can close above those levels, as long as it's closing below EMA4 at 10.75 and below the 100 and 200-day simple moving average, it does signal downside risk. Now, if it were to drop below this 300-day simple moving average at 988, this gap from back here in August will be on deck. And if it dropped down here to the 890s or so there, it would fill that gap. And so that is the target zone on the pullback while it's in a downtrend. I mean, you might as well wait for the gap to fill, and then that could be a better entry point. If it does come down and fill the gap, it might bounce off of this 400-day simple moving average at 855. Like I said before, they could bounce before then and hold this 300-day simple moving average. We just have to see where where it holds support. If you look here on the Fibonacci retrace, you could see here, it went from down here in the sixes back here on August 5th or 14th, all the way up to on the 12th of September to near $17. And so right now, this 1049, this 1050 level, that is your 61.8% Fibonacci level. And notice the high of day hit that level. It's trying to hold the 61.8% zone. It's trying to bounce off of that. We'll see if it can, or if it's going to head a little bit lower like the other stocks in the sector. But yeah, the pullback has happened, and then now it's all about strategizing on the bounce plays. If you look here at APHQF on the weekly chart, you can see here it drop below that 50-week moving average in the middle Bollinger Band at 1116 and 1091. Those levels really need to hold. It could still close above those levels for the week. That would be best. You want to see it back above that 1116 level, closing above 1090. That's going to keep this nice uptrend intact. Notice there is this ascending support line that is lined up with $9, and so that $9 level lines up with the gap, and so you could see it come down, test the support level, fill the gap, bounce off of it, and then push higher again inside this multi-month channel. You can see in the channel it broke above the top of the channel back here in 2017, heading into November and December on the big rally, and then once again it came above the channel over here in what was that, September, and now it's just back in the previous channel again. And so the bottom of the channel is at 9, the top of the channel is up here at 15. Notice also that the big run, you know, November was kind of the start of this big run. Seasonal for the cannabis sector, usually you know, the November, December, January, that time of year is usually the best time of year for the cannabis sector. And a lot of times you get this in January where it peaks out and then it pulls back. And so we could be heading into the seasonably strong time of year for the cannabis sector. You know, it's setting up for a bounce during that holiday season when we usually get the cannabis rally. If you look here at the 15-minute chart on Aphria, you can see here it has more of a symmetrical triangle pattern, and the chart's wound up tight as well. It's a little bit further away from the 50 simple moving average. That's the big level to break. It has to get above 1031 and then above 1044. That's the high close resistance level from 1215 today. Once it's above that 1044 level, it could run up to 1116. Just like the other charts, you can see how they're all very similar. It's going to have to get above this 1090 level to test that 100 simple moving average. So yeah, you know, it's going to just take patience here. You know, that nobody needs to be a hero. I don't think any of these stocks are just going to start running and get away from you. I think patience is going to pay on the pullback, and people that pick their spots wisely are going to do well. And people that chase and catch falling knives and get bad entry points, you know, it could it could be painful. So you just have to be really careful and just always follow the charts. Follow the chart and not the heart. All right, if you'd like to learn more about technical analysis, please come check out the chat. Thank you.